Now, this is the fastest way to increase your credit score. People downplay this. Instead, throw like a small subscription on it, like Netflix, Apple Music, Hulu, Spotify, anything that's small, and then put it on auto pay. That's going to keep the account active, your history intact, and your credit score safe. Now, that's just one way that your credit score gets hurt. Let's talk about another trap that sounds smart, but ends up costing you. Now, also, if your credit report is already bruised and you need something positive reporting like right now, and something that you can afford and something that won't be a hard inquiry, check this out. Kovo is a credit builder tool that reports to the major credit bureaus just by paying $10 a month, okay? Now, you don't need a high credit score. Matter of fact, you don't even need a credit score at all. They pretty much just do an identity verification, okay, to get approved. Scan the QR code right here on your screen, or click the link in the description below to learn more. Now, you've probably experienced this, or someone says, I paid off my credit cards, I closed them to stay out of debt. And then a few months later, they're trying to figure out, or they're wondering why their credit score went down. That's why. The age of your accounts is one of the biggest factors in your credit score. So here's the rule. Never close your oldest card, even if you don't use it. Instead, throw like a small subscription on it, like Netflix, Apple Music, Hulu, Spotify, anything that's small, and then put it on auto pay. That's going to keep the account active, your history intact, and your credit score safe. Now, that's just one way that your credit score gets hurt. Let's talk about another trap that sounds smart, but ends up costing you. And listen, if you end up having a high annual fee and then you want to close it for that reason, then that I understand. But just know your credit score is going to affect you. Number 2. Only paying the minimum balance. Now, this is one that credit cards companies, they hope you do this, okay? Because if you only pay the minimum, they make a fortune off of you, off of the interest that you end up paying. You might feel like you're winning saying things like, hey, I paid my bill this month, but really you're stuck in that cycle. $1,000 balance could take you years to pay off if you only pay the minimum payment. Or worse, your utilization is going to stay high, and that's the fastest way to drop your score. Remember, credit utilization is how much of your available credit that you're actually using. The higher it is, the more risky that you're going to look to lenders. Think about it like this. Have you ever felt like making payments, but the balance barely moves? Exactly, that's the trap. Credit card companies don't want you to get ahead because that's how they make money. Real quick, be sure to download our free ebook today. All you gotta do is scan this QR code right here or click the link in the description below. Now back to the video. Now, speaking of utilization and balances, let's get to mistake number 3. Mistake number 3, applying for too many credit cards all at once. Now, here's where it gets tricky. Every time that you apply for a credit card, the bank is more than likely going to pull your credit report. Now, there are some pre-approval tools out there, but most people don't know about those unless they want to apply for a specific company. But here's what most people don't realize. Different banks pull from different credit bureaus. So you might think, hey, I just applied for one card, but really one bank hit Experian, one hit TransUnion, and then one pulled from Equifax. And now suddenly you have 3 hard inquiries and your credit score drops, okay? Now, it's not the end of the world because inquiries on the last 2 years, and it doesn't just stop at the score drop though. Too many inquiries can make lenders nervous. It looks like you're desperate for credit. And when lenders see desperation, chances are high that they're gonna deny you. You've probably seen this play out. Like, for example, someone says, I applied for 5 credit cards to build my credit, but all I got were denials. That's because the bureaus caught all of those inquiry hits and the banks backed away. So here's the strategy. Space out your applications, unless someone's giving you like a credit card stacking strategy. But other than that, do your research. Know which bureau each bank pulls from and apply with intention. Don't do like a shotgun application because in most cases it's going to backfire. Have you ever done everything right with your credit cards, only to watch your credit score drop for literally no reason? You pay on time, you try to keep your balances low, yet somehow your credit score goes down. Here's why. That's because there are hidden traps that are baked into credit card rules that nobody really explains the right way. And mistake number 1 is a big one. Number 1, closing your oldest credit card. Now, I know that this one's tough, but this one's gonna hurt the most because people usually do it thinking that it's a smart credit move. Here's the thing, you pay off a credit card, maybe it just has a fee, and you think, let me just close it and so I can be done with it. Here's the problem. That credit card is a part of your credit age. The longer that your accounts stay open, the more solid your credit looks. So when you close your oldest credit card, it's like erasing history off of your credit report. And without history, your credit score is going to drop. Now, I did want to mention this as well. If you're ready to get pre-approved for a car loan, even if you have bad credit, I'm talking right now, we've partnered with a nationwide auto loan program that specializes in low score approvals, okay? They have access to lenders that work with all credit scores. So if you're in the 400s, if you're in the 500s, and they also help you with finding a car, okay? Go ahead and scan the QR code or click the link inside the description below so you can find out what your options are in just a few minutes. Now, this is the fastest way to increase your credit score. People downplay this. Credit card balances are a huge part of your score. The lower your balances, the higher your credit score is going to go up. But here's where people mess up. They pay off a little bit here, a little bit there, just making the minimum monthly payments. That's not the best strategy. The smart move is to focus on the cards that are closest to being maxed out. Bring those balances down first. For example, if you have 3 credit cards, one at 90% utilization, one at 50%, one at 20%, you want to pay the one that's at 90% first. That's where you'll see the biggest credit score jump. Now, you've probably felt this before. You pay down a card and then boom, your credit score goes up 20 points, 40 points, and some people are seeing like a 60-point increase. That's because the system rewards you, the algorithm, for bringing down your utilization. And remember, don't close those accounts once you pay them off. Keeping them open keeps your credit history alive. Now, what if I told you that there was a way to lower your utilization without paying thousands of dollars? That's where step 3 is going to come in. Step number 3, ask for a credit limit increase. Now, some people call this a CLI. You'll see this online as a CLI, okay? This is a trick that most people don't use. If you already have credit cards and you're already carrying balances, which you shouldn't do, but if you're in that situation, it is what it is. You can call the credit card company and ask for a credit limit increase. Here's why this works so well. Your utilization is your balance divided by your limit. So if your balance stays the same, but your limit goes up, you instantly look better. Let's say, for example, you have $1,000 on a $2,000 limit credit card. That's 50% utilization used. If they raise that limit to $4,000, now you're only at 25% utilization, and your score is going to see that as a positive. Now, not every bank is going to say yes, but many do over time. Just make sure that you ask for an increase without a hard inquiry if possible. Some banks will automatically do this too based on how you're using the card. This move can not only add points overnight, but it's also without spending a dime. Number 1 is going to be rent reporting with rentreporters.com. Now, here's something that most people don't know. Rent is usually your biggest monthly payment, but it doesn't even show up on your credit report automatically, unless you're in California, because they just passed the law. But anyway, that's crazy, right? Imagine paying for rent for 5 years and getting 0 credit for it. That's where rent reporting comes in. Services like rentreporters.com, they take your rent history and they add it to your credit report. For some people, that's 24 months of history showing up overnight. That means instant positive history, which can give your score a major bump. Now, think about it like this. You've already been paying rent on time. Why not get the credit for it? You can scan the QR code on your screen or click the link below to get started. With OpenSky, pretty much everyone's approved because there's no credit check, okay? Now, why choose OpenSky? Okay, you might even be thinking, aren't there other secured credit cards out there like Discover Card or something like that? So here's the thing, cards like Discover Card is great, or even Capital One is good, but they're going to run your credit and there's a chance that you may get denied. With OpenSky, pretty much everyone's approved because there's no credit check, okay? The only way you can get denied is if you've had them in the past and then you close the account with an open balance and you never paid them, okay? And that's what's gonna make it a big difference. And there's no bank account required, another hurdle removed for many applicants. Number 3, flexible deposit options. You can start with a lower deposit if that's all you can manage. Remember, you could do it as low as $100, and it reports to all 3 credit bureaus. Not all secured credit cards are going to do this consistently, which is why it's vital to keep maximum credit building, and you want to keep that impact as well. While some alternatives might offer cash back rewards or a better upgrade path, Open Sky is going to prioritize making sure that you have accessibility and different credit building, which for many is exactly what's needed. Now, to truly maximize your Open Sky experience, here are my top tips. Number 1, set up auto pay. Never miss a payment. Even if it's just the minimum, ensure that it's paid on time if you can't put it on auto pay. Number 2, keep your utilization low. As I told you, you want to aim for 10% or less, okay? People say 30%, but again, keep it well under that. So again, if the limit is like, $200, be around 20, no more than 60 if you have to, okay? Make small, regular purchases that you can easily pay off. Don't use it for things you can't afford. Next, monitor your credit. Use free credit monitoring services to track your progress to ensure that everything is reported correctly, okay? Now, there's some bad advice that's out there where people say secured credit cards are bad or they're just for desperate people. Listen, that couldn't be further from the truth. Secured credit cards are legitimate, they're effective, and often a necessary tool for financial rehabilitation and growth. They provide a controlled environment and they prove your credit worthiness. Think of it as, earning your stripes, even if you're starting over again. Once you master this secured credit card, you've built the foundation for a lifetime of good credit, which translates into better interest rates on loans, easier approvals, and more financial opportunities. You want to add a credit builder like Kickoff, okay? Now, there's a lot of credit builders out there, but listen, if your credit report looks thin, you need to add accounts that report positive history every single month. Now, one of my favorites is Kickoff, okay? It's simple, it's affordable at $5 a month, and it reports like a regular account. What this does is it adds payments history, which is 35% of your credit score. The earlier that you start this, the better. Imagine your credit report 6 months from now with Kickoff showing all on-time payments. That's the type of things that lenders like to see, even if it is $5 a month. And again, you can scan the QR code on your screen or click the link in the description and you can learn more about Kickoff today. I saw a comment the other day from someone asking, Calvin, is it better for me to pay off my credit cards all at once or should I spread the payments out? That's actually a really good question. The answer is it depends on your balances and your due dates. The safest way is to pay before your statement date so that the lower balance actually reports to the credit bureau. Now, I recommend that you don't carry balances anyway, but that way your score reflects what you owe after you've paid it and not before you've paid it. Now, here's what you want to say if you have an account that's in collections, okay? Let's go. I know this account is in collections and I like to resolve it, but I'm working with a limited budget. I can offer like 30 to 50% if the account is marked paid in full or settled in full. Can we agree to that in writing? Okay, now that's what you want to do. Now here's a pro tip. Always ask for confirmation in writing before you pay anything, okay? Let me give you an example. One of our members negotiated a $1,200 debt down to $480, and they got it marked as paid in full after saying exactly what I just mentioned, okay? Now, number 4, you need to know your leverage, okay? You need to know your leverage. Everybody's situation is going to be different, but let's be real. Debt collectors, they bought your debt for pennies. That means they have wiggle room, okay? Let me give you an example. A $900 debt may have cost them only $90. So if you offer $300 or $400, that's still a profit for them. And if the debt is old, let's say over 3 years, check your state statute of limitations. Now, why do you want to do that? Because in some states, they can't even sue you after that window closes, okay? Now, here's a pro tip. Before making any payment, this is what you need to ask. Can you verify this debt in writing and confirm the date of last payment? Now, why do you want to do this? This protects you from resetting the debt clock. So even if you get a bad deal now, it doesn't mean that it's going to be permanent, okay? If you've got a high interest rate auto loan right now, and that's mainly because of your bad credit, do not panic, okay? You can always refinance later, all right? One of our clients had a 22% interest rate, then she refinanced about 11 months later for about 9%. that dropped their monthly car payment by over $100. So even if you get a bad deal now, it doesn't mean that it's going to be permanent, okay? I would rather you get approved and not have the best interest rate, but now you solve the problem of getting a car, so you can at least get to work in those things, start improving your credit score, and then refinance for better terms, okay? Number two, you have to understand the difference between subprime and deep subprime lenders, okay? When your credit score is in the 400s or even the low 500s, you're in what they call the deep subprime range, okay? When you think of steak, think of like prime steak, and you got subprime steak, right? It's a step down. There are still lenders though that are out there, but they have some rules. Some of them are going to want the following. Number one, proof of full-time income. This is very common because they got to make sure that you're actually making money, okay? Number two is going to be larger down payments. They're going to need some skin in the game. They feel like if you are in a position to give them some money towards the vehicle, then you're also going to be in a good position to pay the car note on time, okay? Or even a cosigner, okay? Number three, this is going to be credit union auto loan programs, okay? This is where most people miss out, all right? Credit unions are often more flexible with bad credit than traditional banks, okay? Now, if you're starting at zero, that means you have to start somewhere. There's two ways that you can get an account brand new if you're brand new to credit. And that's going to be technically three ways, but one of them are different categories. So that could either be a credit card or a credit builder. That credit card can be either a secured card or an unsecured card. If you go with a secured card, that just simply means that you have to give a deposit in order to get access to the card. There are companies like Capital One that have deposits as low as $50, $100, or $200. And then you have some companies like Open Sky where it's a flat $200 and they don't run your credit. So you can get denied for a Capital One secured credit card if they're running your credit and they don't like what they see. Versus Open Sky, it's gonna cost you more, but they're not looking at your credit. That's if you go with a secured credit card. Now that we have the basics out of the way, let's go ahead and talk about how you can actually go from zero all the way up to 800. Now, keep in mind, this is just 800, not 850, okay? To get to 850, you need 5 to 7 open accounts, and you gotta have them open for 8 to 11 years. This strategy will have you'll be able to see those similar results in less than 3 years, maybe around about 2 years, depending on how fast you get these accounts open. This method, you still need about 5 to 7 accounts. You can get away with about 5 accounts, and then you don't have to have them open that long. About 3 years or so, 3 or 4 years or so, you'll most definitely start to see your credit score get to that 800 range for sure, okay? Now, if you're starting at zero, that means you have to start somewhere. You have an unsecured credit card, you can start off with Capital One or any company that you want, really it's up to you. But different companies are gonna have different fees and such. But once you do that, no matter which credit card you go with, you most definitely want to make sure that you're using a very small amount of it. So with credit cards, going back to what we learned earlier, utilization. You want to make sure that you're keeping your balances under 7 to 10% utilization. For example, if your credit card limit is $1,000 and you want to stay under 10%, 10% of $1,000 is going to be $100. So that doesn't mean that you can't spend more than $100, but if you do, your credit score is going to kind of fluctuate, okay? So to reduce the risk of certain things happening, I would recommend being an authorized user on someone's credit card that you know, a family, a friend, a spouse, something like that. That way, if they do use the card, they're a phone call away, they're a text message away. You can drive to them if you needed to, right? Versus some people do what you call a trade line, same thing, but they're paying to be on someone else's card. Problem is, they don't know who that person is in most cases. So you have someone that has your first name, your last name, your social security number, because they're gonna need that in order to have it go on your credit report. And so now you have multiple people with your personal information. You don't know who has this information, but when you have an average age of accounts, what you want to do is you want to have accounts open for a long period of time. Now, that doesn't mean that you can turn a 4-year auto loan into a 6-year auto loan. That means you haven't been paying them, okay? Because that balance is supposed to be coming down. That's where revolving accounts come into play, because with revolving accounts, you can have that account open for 5 years, 10 years. I've even seen people with credit cards open for 30 plus years, okay? So again, it's most definitely possible. If you're looking to increase your credit score, qualify for homeownership, or lower your monthly car payment, we can help you. We can take a look at your credit report and create a custom game plan for you to help you accomplish your credit goals. Scan this QR code or click the link in the description below. Now back to the video. The fourth factor is a factor that isn't talked about as much, and that's going to be 10%, and that goes with credit mix. So this goes into talking about revolving accounts, installment accounts. You're going to naturally just get accounts over your time frame of just living, really. So let's say, for example, you get a credit card, then a couple years later, or a couple months later, really, you get another credit card. Another few months later, you get another credit card. That's 3 accounts right there. You end up getting a car. Now you have 4 accounts. You get a house. That's 5. So that's how quickly that can happen. We're not even talking about personal loans, student loans, secured credit cards to help you to get started. So all of those things play a role. Now, there's one more mistake I need to talk about, and this one is sneaky because it feels like free money at first. Mistake number 4, using your credit card for cash advances. Never, ever do this. A cash advance is when you take money out from your credit card at the bank or an ATM. And the second that you do that, the interest is going to start immediately. There's no grace period. And on top of that, there's usually a big fee, like 5% of the amount. So imagine you take out, let's say $500. That's like a decent amount. Right away, there's going to be a fee, and right away is going to be interest, and it's going to start piling up. If one of those most expensive ways is to borrow money, then that's going to be one of those. And once you're in the hole, it's hard to get out. Here's why most people get stuck. They treat their card like a backup bank account, but your card isn't a bank, it's a business. And businesses love when you're stuck paying interest. So the rule is simple. If you need cash, don't use your credit card. Look for safer, cheaper options. Now, if you've made any of these mistakes before, don't beat yourself up. We've all been there. We're all learning. School doesn't teach this stuff. Some of our parents don't teach this stuff. But here's the good news. Once you know the rules, you can play the game better. Now, here's a quick recap. The 4 things you should never do with your credit card. Number 1, never close your credit card. I hope you guys are writing this down. Number 2, never only pay the minimum. As a matter of fact, pay more, pay extra. Be done with these credit cards, and that'll allow you to pay interest as well. Never apply for too many credit cards all at once, unless someone is walking you through a credit card stacking strategy, okay? Never use your credit card for cash advances. Now, if you're with Navy Federal, sometimes you can actually, not sometimes, you can actually move that money over to one of their Go cards, okay? But other than that, don't do that. Drop a comment below and tell me which of these mistakes have you made in the past. I love to see how many people have experienced this and learn from it. And don't forget, grab that free credit card tracker as well. It's in the description, and it will help you stay on top of all of this. And one last thing, I saw a comment the other day from someone asking, Calvin, is it better for me to pay off my credit cards all at once, or should I spread the payments out? That's actually a really good question. The answer is it depends on your balances and your due dates. The safest way is to pay before your statement date so that the lower balance actually reports to the credit bureau. Now, I recommend that you don't carry balances anyway, but that way your score reflects what you owe after you've paid it and not before you've paid it. And listen, if you've liked this video, you'll love the next one. I'll see you there.